And time now to talk some REITs. And to do that, let's bring in Brian King. He's the CEO of Lotus. Welcome to the show, Brian.
Hi, thank you so much for having me.
Excellent. Now, I need to talk about the news of the week. We all saw WeWork filing bankruptcy. Like, just with that alone, how does it cast a shadow over REITs? And what's the case to still invest in REITs after seeing that bankruptcy?
Yeah, that's a great question. I think, as we look at WeWork specifically, I think the opportunity, what that does is it sheds a light on really the opportunity for investments. While many people are, going to have lost money, over that particular investment, a lot of money went into TI improvements for the individual asset. What I think we're going to see going forward is anytime that there's an opportunity where somebody exits, a lot of times it creates an opportunity in the secondary market for you to be able to have a great buying opportunity. So somebody's going to get this at a discount and going to be able to, in a bankruptcy situation, be able to renegotiate a lot of different lease terms. And I think at the end of the day, it's probably going to be a pretty good outcome for a lot of different people involved.
Those are some pretty good ideas. Now, given the current economic climate overall, high mortgage rates, what kind of strategies is Lotus employing to attract more investors to the non-listed REIT and private real estate investment market?
Yeah, so for us, we function a lot like an exchange. So a lot of people use us to be able to buy and sell investments. So again, creating liquidity. Typically, these investments are illiquid by nature, and so for what we're trying to do is we're creating liquidity for these, again, traditionally illiquid investments. And so a lot of times with a lot of Fed decisions, you've seen the Fed go back and forth quite a bit as far as their opinions on if they're going to raise rates, lower rates. And as we see them kind of vacillate back and forth, I think that what that does is that creates a lot of volatility in the underlying and people trying to figure out, like, what am I going to do? And listen, at the end of the day, the biggest competitor to real estate right now, believe it or not, is cash. Because right now, if I can get a risk-free 5% return, there's a lot of people who are looking at real estate and other assets as having a lot of extra risk. But again, when fear leads decisions, it creates opportunities for others.
Now, you mentioned liquidity and creating it, right? So how are you actually ensuring liquidity in the marketplace and addressing some of those concerns for investors who are seeking liquidity in the current market conditions?
Yeah, so right now, as far as how we match buyers and sellers, and right now you've probably seen headlines of so many different bank institutions, insurance companies that are clearing off spaces in their balance sheets to be able to make allocations to secondary markets, particularly secondaries in real estate. Again, as some people are having to make an exit, it creates an opportunity for somebody to come in and buy it at potentially a lower price point, being able to buy that at a discount. So we've seen a lot of banks, again, clear off balance sheet for this. And so again, for us, we have a large network of buyers, mostly institutional in nature. We have, some family offices, accredited investors that also participate, but it's a lot of institutions that are buying on our marketplace today and can be able to buy all kinds of different assets.
So let's talk about large funds within this space. Now, how does the large funds like Blackstone's REIT and Starwood's REIT impact the Lotus marketplace in terms of trading volume and investor interest?
Yes, so for Blackstone and Starwood, you mentioned, for those funds, they actually do have a liquidity valve, but something that's, kind of been in the headlines quite a bit over this last year has been the fact that they're limited as to how much in redemptions they can meet. And some of those funds received a lot of redemptions, multiple billions of dollars worth of requests to be able to have an exit. But because of the limitations as a part of the fund structure, they couldn't meet those. So what we did is we listed those funds on our marketplace to be able to allow buyers to come in and provide that liquidity where the fund can't do it. Again, for us, we love the opportunity to partner with various sponsors because at the end of the day, the fund probably isn't the best source to be able to provide that liquidity. Sometimes they have to do unnatural things to be able to provide liquidity, maybe sell an asset that they didn't want to sell, or have to raise additional capital in a way that provides terms that normally they wouldn't. So, a lot of people say, well, real estate isn't supposed to be a liquid asset. And, the way that I kind of look at that and I say, listen, Microsoft technically isn't a liquid company. The only reason why it is because it's traded on a secondary market. And so similarly, if you have a secondary market for real estate related investments, it creates that liquidity as well.
I mean, that's really the strongest point of this, the secondary market. So tell me a little bit more about how you guys have infused this into your growth strategy.
Yeah, so again, we function a lot like an exchange. We're registered as an ATS. For those who don't know what an ATS is, it's a lot like an exchange. An exchange is self-regulated. An ATS outsources its regulation to FINRA, so therefore we're also a broker-dealer. And so for us, it's the key catalyst of what we're doing. I've spent my whole career building marketplaces and being a part of BATS, which is now owned by SIBO and the New York Stock Exchange. So building lots of different marketplaces. But for us, building a marketplace to create liquidity for traditionally illiquid investments has really been a big part of our growth strategy.
All right, we're going to have to leave it there. Brian King, CEO of Lotus, thank you so much for joining us here on the Schwab Network today. Now, coming up, we'll be joined by the CFO of Innova, an online lending company